I call it the revenge of the miners. We've had such a rough time for the last 5 years, and you know, yeah, really. Time for some revenge, right? The coming age of shortages and scarcity. We have supply-demand issues in silver and copper and other metals. That's going to affect us, so that's what I'm talking about today. Personally, I'm most bullish on gold, silver, copper, and uranium. And I'll explain why on each one. You know, 2025 was a great year for me personally. If you know my model, I've always tried to use the exploration juniors and the development companies in particular to try to make a lot of money. And my model was always pay off all debt, build a big stash of physical gold, silver, and platinum, and just keep building. And that's what I've done for 29 years. And so, yeah, to see gold and silver and platinum move the way they have, we've done incredibly well. I'm considering selling now a little bit of my metal to start buying the juniors who haven't moved yet with these increased prices. I think there's incredible opportunity right there. So I made more money last year in metals than I had mining shares, which that's been a first of all the years I've been buying metals. So it's been fun. I expect to see a small portion of my physical metals to increase my exposure to the junior mining stocks. And this is going to be a great year. I think 2026 is another great year ahead. There's challenges as always, but the mounting political pressures that are happening in and around the world, trouble is ahead for sure. But I think we have a window here to make some really good money before that starts to really kick into gear. With gold, even with a current gold price of $5,000 an ounce, what is coming will be much higher in price and much longer in duration than most investors realize, think, or understand. I don't like saying that. You know, the miners can all make great money at $5,000 gold, right? We don't want gold to go too much higher because then that's trouble, right? That means trouble. And we don't want trouble. We want to make money and we want to live the good life, right? So I think we're going to get that window. Silver, even at $100 per ounce, silver, in my view, will be the best performing metal for a long time to come. But don't be afraid to take profits along the way. I've always said to follow the silver-gold ratio to understand its true value. A lot of these guys just almost ad nauseum throw out these numbers. Oh, silver's going to this, silver's going to that. Well, what basis do you have for that? I mean, it's nonsense. So I always use the silver-gold ratio to help you see what the real value is, and then compare that with what's going on with the miners of that metal. You know, last year, silver to gold ratio was 96 ounces it took to buy 1 ounce of gold. Now with 100 ounce silver, it's 50 to 1. So it's been cut in half in less than a year. But before things settle down, I believe we are headed to 15 to 1, maybe 10 to 1 before this silver bull is over. The silver short situation is akin to the subprime mortgage situation of 2008. If you're not aware of that, the 8 bullion banks, JP Morgan Chase, Goldman Sachs, Deutsche Bank, HSBC, Bank of America, Wells Fargo, blah, 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 they all collectively have been shorting silver massively on the COMEX for decades, making crazy amounts of money. But when they cover those short positions, as they must, they have to cover with physical silver, not paper money, okay? And they're caught now because over the years, they've built up a collective silver short that's minimally, and it could be higher than this, some people say it's higher, I just go by with the most conservative numbers. They are short 4 billion ounces of physical silver, and there are no above ground inventories. So you see the problem? All of those banks that I just mentioned, that silver short position at $100 an ounce silver means their liabilities are greater than their assets.
What's up?
Got the point?
Yeah,
All right, copper. Copper is a sleeper right now. I think it's just a situation where, again, the supply-demand fundamentals are so upside down. The projected shortfall for the next year is 10 million tons. 10 million tons. Obviously, the copper price is headed much higher, and possibly even the $25 or $30 range, because if people can't get copper, then there's shortages, and then what happens? They can't do this, they can't do that. Copper is the basic building block of our society. So there's plenty of opportunity in copper as well. Uranium, this is one I've been waiting on personally. I've been a big believer in this, but I think the moment has now come. The rapid building of massive data centers in the US and around the world guarantees, in my view, the uranium bull, because the only option left for the tech giants to power all this, all the electricity and baseload power they're going to need, is through nuclear power. And that's, I think, what they're going to do is these modular units are so effective, and I think what you'll see is they'll start putting in a modular unit, and then as they grow the data center, they can add another modular, another modular, another modular. And of course, where are they going to get all the uranium? From the US production that Bill and Janet are going to talk about here. So I'm very excited about that. The US grid is antiquated. There's no way the data centers can get any more out of no more juice out of the current system. It's antiquated. It's needed upgrading for a long time, and it just hasn't happened. So there's a metal and energy shortage coming that no amount of money can fix quickly. I'm sure they're going to try to throw a lot of money at it, but you just don't start up a silver mine or a copper mine or uranium just overnight. These things take time, and there's just no way that supply-demand fundamental is going to change anytime soon. So herein lies the greatest opportunity to profit we've ever seen in our lifetimes. What makes it very interesting for me is that you're going to see these fund managers, and I know a lot of them. I've met them over the years at the Beaver Creek Precious Metals Summit. Every year up there, this is in Colorado, beautiful setting, ski resort in the fall. They all love coming from around the world, and they have a big old party up there. And it's really good. They meet with the mining people, and these people have only dipped the toe in the water in mining. When these people come, as we've seen, and we haven't seen it for like 15 years, but it's like a light switch. It's off, it's dark, all of a sudden, boom, it's on, and these people come in, and they can just bring 200 million or a couple billion to the table without even blinking an eye, because they know they have to be in this space, and they just come in and buy the whole thing. And you got 1,100 guys like that. Although one guy I talked to, he managed $1.3 trillion under management. I mean, he needs exposure to our space. He could throw $5 billion to us, and it wouldn't even dent him. It's like us throwing $1 at somebody. So we're gonna see that. That's what's gonna drive our stocks. That's what makes us the big money. That's where all the boats float. So this is the Super Bowl for resources that I've always talked about, I said was coming. I certainly didn't get the timing right, but we had to wait for it, but now it's here. When metals markets move, they move hard and fast. Those that got in early, the contrarians, have already made fortunes in the last year. The amount of money that is about to come into the resource space will be unprecedented. All the boats are going to float, like I said. The last 5 years, we have been through the worst bear market we have ever seen. It was painful and sometimes felt like it would never end. But as one friend from Toronto just told me a few days ago, investors in the resource space are going from the outhouse to the penthouse in short order. And we are on the express elevator. This isn't the local elevator. Those attending this conference, you are in the right place at the right time. Pay attention. There's a lot of good people here. They have a lot of good stories, and you want to be with the right companies, of course. But even just being in this space, even the scam artists are going to float, right? We don't want them, but I'm not advertising for them. We don't want those guys, but we like the good guys like Bill and Janet and Christian there. So anyway, you're at the right place. So nations rise and fall, empires come and go, alliances shift and change. I'm an American. What I see in the world is just, it's desperate, okay? And the reason it's desperate, it's the changing landscape of world power. And I'm I have this a little bit later, and I'll mention it now, but have you ever seen the Ray Dalio YouTube video? It's the 80-year big cycle. If you haven't watched it, you need to watch that. It'll help you understand what is about to happen. We're at this major pivot point. Major countries are scrambling to control and hoard resources, shipping routes, and strategic interests. It is causing a great unsettling amongst the citizens of the world. Rivals are exploiting norms and rules that have been in place since the end of World War II. Elites appear completely out of touch with reality, and unfortunately, war, as Ray Dalio says, usually accompanies this change because the powers that are losing their power don't go easily and they want to fight. And it's a mess that happens throughout history. It seems like roughly on an 80-year cycle. We hope that better heads can prevail, of course. We the people here in Canada and America, none of us want war, right? But it's looking less likely with each passing week as we see these struggles amongst the major powers of the world. There's a rush into all these various asset classes. Everything's going. It's not just precious metals, but it's crypto, it's Dow stocks, it's land, raw land. I was trying to buy some land in Laramie recently. I watched some of these lots, and I thought, I should check that. I should call this guy, And I had seen these signs that had been up for a couple years, and the day I called, they said, well, that just sold yesterday. And then I went to the other one. Oh, that one sold last week. Well, some money came in and bought all the available lots that were for sale. They bought it up, all of it, like within a couple weeks. So I was telling you something, right? Anyway, the era of abusing fiat currencies is over. Guys like me, we've been warning about this forever. Again, we didn't get the timing right, but it's over. The system is broke, and everybody has too much debt. Never in world history have we seen such a challenged set of circumstances with some companies collapsing as we speak. Look at Europe. Great Britain is almost in civil war. France looks like they're in civil war. Japan, the prime minister comes out and says, we have no good options. We don't know what to do. South America, Iran, look at what's going on in Iran. I have a friend in Iran, Salar his name is, and he tells me about what's going on, and he says, Greg, it's awful. The inflation over there is so bad because the country is in desperate need of water, and the government has had to spend a lot of money to try to get water, and it's failed. And now the government has too much debt, and the inflation is outrageous, and the people can't survive. The middle class is being decimated. And they're protesting, and then they're getting killed for it. So we're just seeing these kind of things. We could predict these things because governments can't keep spending money they don't have and get away with it. Sooner or later, history proves that it catches up with itself. We're at that moment, and we're in this pivot. So all this debt and with inflation concerns are growing by the day everywhere. This is destabilizing the world financial, economic, and political norms. This pivot point is real, and it's here. And that's where I mentioned Ray Dalio's thing. We definitely want to watch that if you haven't watched it. So why am I saying scarcity and shortages? Let's just take the silver space. Roughly 830 million ounces of silver are produced each year, with 178 million of those ounces coming from recycling. Big industrials like Samsung, Tesla, Apple, Boeing need over 1 billion ounces just amongst themselves. So these are only 4 companies. There's a shortage. There's no above ground inventories left. Sure, there's some whatever investors like you and I hold. That's a number, but it's small really compared. There's only 1% of all investors in the United States own any physical precious metals that they've taken delivery of. I'm not talking about ETFs. I think those are a fraud. People are going to find out there's no real metal behind those things. That'll be the emperor has no clothes moment, believe me. The U.S. military needs close to 50 million ounces annually. A Tomahawk cruise missile requires 500 ounces of silver per missile. Industrials are going directly to producers now. They're skipping the COMEX because the COMEX turns out to be a Ponzi scheme. And so they're going to the producers directly to procure what they need. But looming shortages for an indefinite period of time seem imminent at this point. Again, there's no quick, easy fix here. What's going to happen? I think these silver mining stocks could go to the moon. because the funds will come in. There's not for the money they have to invest. There's not enough left in the silver space, so they'll come into all the gold and silver and uranium stocks to invest their money in resources. The resource Super Bowl. This will be the best resource market any of us have ever seen in our lifetimes. It's just beginning. Yes, the early investors have already made big monies, but don't let that deter you. Just be focused. Don't invest more than you can afford to lose in this space, because it's a speculative space, as we know. And I don't care who you are. We've all lost money, right? I try to make good choices, but sometimes they work out, sometimes they don't. That's the nature of speculative investing. Personally, I love the royalty plays and exploration juniors, and we'll send out my top 10 picks for playing this market moving forward. I'm going to send that out in the newsletter. I can tell you 2 of the companies that are on that list are sitting right beside me, and that's why you're going to want to listen to their stories. It's very exciting. It will come out the first week of February. It'll be a combination of gold, silver, copper, and uranium stocks. I'm trying to boil this down to the smallest group of companies that I'm going to put the most amount of money. And that's going to probably be in one of the most important newsletters I ever write. So we have a window to make monies, and don't be afraid to take profits when they come. I tell you, the lesson that I've learned over and over again, don't get greedy. Don't get greedy. We're living in a time that's very dicey right now, and we could be in a super bull market and things are going great. And if you leave money on the table and wait for a better day without taking some profits along the way, I've often rued that day, right? One time I was speaking in Toronto, and I had mentioned, I talked about this. My whole talk was about don't get greedy, always take profits in a disciplined fashion along the way. And he came up and he said to me, look, Greg, I'm a technical trader. I am professional. He said, I wish I could take your talk and plaster it to all my clients, right? And he said, because it took me 14 years to learn that lesson. And he's a professional trader. He said, it's just in human nature to want to wait, get greedy, With everything that's going on in the world, I think we need to be careful. If you have a 2x, 3x, 4x, start paying yourself back. Get your original investment back. And if you want to hold a little longer, then hold. But be careful. Be careful. Yeah, so this is the opportunity of our lifetimes with speculative investing in the resource space. Be patient and persistent. And don't get greedy. As I say, try and pay yourself back when a stock moves in multiples. I have learned over the day that if you don't take profits, you're going to rue the day sometimes. It just happens that way. So